So it looks like we are now live. I'm just verifying.
Great.
Fantastic. So we are live. We are back, I suppose, for another episode of the Proof of Beauty podcast. We're currently looking for a new soul, a new name, new identity. So for now, it's the Proof of Beauty podcast. And if you guys have any suggestions, maybe drop a comment, let us know. Yeah, we're looking for a new soul. I'm BitWizard, one of the producers at Proof of Beauty, and I'm just going to be leading off the conversation here. I'm going to turn it over to Dave and Ash, and we're going to talk a little bit about current events. But really quickly, I just wanted to Ash, how was NFT.NYC and how was ApeFest?
Yeah, it was pretty good actually. I think it was Lil Wayne's, Snoop Dogg, and I can't remember if
Oh,
Eminem was
dang.
there or not. But yeah, I saw people from the distance in VIP. It was cool.
In VIP.
In
Nothing fancy.
VIP.
Yeah,
Subtle drop.
nothing fancy. But yeah, it was cool. I had a good time. I was hanging out with the Manifold team. I met Richard of Manifold. He's super nice guy. Yeah, couldn't be the nicest guy, and helped me get into events and stuff like that. So
Awesome.
But yeah, it was great.
Yeah, I know Dave kind of mentioned to me that you were picking up some signaling about Proof of Beauty and kind of just like picking people's minds about what they thought of the studio. I'd love to hear a bit of that from you and hear, what kind of signaling you picked up and what kind of things people are saying about Proof of Beauty.
Yeah, so I'm gonna go to the My Lady rave tonight, and hopefully I'll get even more signaling for people.
Nice.
But most people, okay, so most people don't know Proof of Beauty, but some people are pretty familiar. Like they'll have heard of Hash, like the 50 ETH first transaction sale, or like the
Hmm.
transfer of ENS DAO. Um, so Keisha of Subdrive and Blipmap, she was aware of Proof of Beauty. Young Weekend, I met Young Weekend. He was a OG like Hash fan. So everyone's kind of aware of Proof of Beauty or London or Hash.
Yeah.
And so I was kind of trying to get people excited about ABF and even Reaper. So I think just talking about Brainfuck and ABF definitely tickles people. It gets them excited. So that's good signal.
Yeah, that is good signaling. That's awesome. Anything you want to jump in on, Dave, or should we turn over to what's going on?
Well, before I forget, want to really give a huge shout out to you, BitWizard, for being around in the Proof of Beauty sanctum. We do crazy things, and sometimes crazies deter people, but you're here. So,
yeah, man, happy to be here.
Power to the people, but power to doing crazy things.
Yeah. Awesome.
Huge
Yeah,
shout
power
out.
to crazy things. That's awesome. I appreciate that, man. It's great. It's great to be
Yeah.
here with you guys.
As you can see, Bits really upgraded the podcast game. So now this is like a legitimate thing.
Yeah,
We're gonna
yeah.
upload it to RSS feeds on Anchor, hopefully. And so this will be
Yeah.
a legitimate podcast after this episode.
Yeah, exactly. The goal is to continue to improve our production quality, find out which distribution pipelines like work the best for us, what podcast distribution, like for example, Spotify versus iTunes versus whatever platform we want to put it on, right? So it's just ironing out distribution. And then over time, increasing that production quality and figuring out how to get the most out of a show and hopefully bring on awesome guests. I know we have some really great minds in the crypto space. So I'm really excited to continue to improve this podcast, guys. It's going to be great.
Exciting.
Just to clarify, BitWizard is not just the podcast maestro. He, as he grows into helping us out in other areas, we'll certainly figure out. Like he's a producer for the studio, not just a producer for the podcast. That's what I'm trying to get across.
Yeah, for sure.
So, exciting things.
Awesome, guys. Well, should we jump into the headlines that we want to go through? Because there's some really cool stuff going on.
I saw the Solana phone news. Oh my god, and the website
yes,
stuff. But
I
did not
wait
read
to talk
into
about
it.
this. Yeah. Let's just jump into it, guys. So I am going to open this up, and I guess we'll start with the Bancor.
Oh yeah.
I don't know if you guys caught this at the beginning of the week. Ash, did you see this?
No, not the Bancor news.
Man, it's just unfortunate.
Oh Jesus, is it offline?
And this was her last tweet since, by the way. So
June 22nd. Okay.
yeah.
So,
Um,
do you know how this insurance was first given in the first place? Like, is this like a Bancor DAO printing money by dumping the token kind of a deal? Like, uh,
yeah,
like,
yeah. I'm not 100% sure on all the details here, but I mean, it looks really bad for the people who are involved with Bancor, right?
Yeah, Jesus Christ. So Bancor is what exactly? Lending protocol? I forget.
See how they define themselves. Let's see here.
So they said
So-
DeFi trading and staking. Okay, liquidity shit.
Yeah,
Classic.
one of the biggest things is that they go 100% impermanent loss protection, right? And
so
how's that work?
couldn't be 100% anymore.
So that means if so, it's saying that its fees are made because I do know that Bancor is a matcha. You can select Bancor as your liquidity route.
Mm-hmm.
So to take a step back because I think impermanent loss is a confusing concept. I'm understanding this, which correct me if I'm wrong. Is say you deposit WBTC, right, and they promise you a whatever APR, right? I assume because they are a trading protocol, they need to divest some of that WBTC into ETH or do a stable coin, right? To create an AMM. Right? Like they can't just only own one token, as I get it. So impermanent loss is meant to protect you from having half your money technically in another asset.
Yeah.
That's my understanding of not having impermanent loss insurance means that if there is a discrepancy of prices due to the fact that you gave 100% WBTC, you're incurring the cost a little bit now, given that it's paused over wherever the protocol got the money to do that.
Right. Yeah, that's exactly how I read it too. Yeah.
Okay, and I'm looking at these yields. They're like SNX at 23%. Like I don't know where this is coming from, but like
yeah.
I guess ETH at 2.2 is
I used Bancor back in the day, I think, maybe. But so what is impermanent loss insurance? How can it what do you mean by insurance?
So if you were to withdraw, let's just say you put one WBTC in, right? And then they have to go split it up into half USDC, let's pretend, right? And then let's just say you want to withdraw again that one WBTC. You know, there's a delta of price from selling that half again back into WBTC, right? So let's just say WBTC goes up in price, then all of a sudden you can only give back 0.98 WBTC. So that delta, that 0.02, is that insurance, right? Because they have to split your asset into two things. And so if there's like a price discrepancy of selling that thing back to what you originally gave it to, they have to cover that with impermanent loss insurance. So I don't know if that made sense to you, Ash, but like it's the idea of like they had to, you gave 100% of something, they have to sell half of it to be an AMM.
So I've used it. It's the only AMM that lets you deposit all of one asset and it will automatically rebalance.
But then they're pretty much saying is with the permanent losses, I guarantee you that you'll get exactly what you gave to us. Earlier. But then without that insurance, they can't make that guarantee anymore.
But where's the insurance come from? What?
I
guess from the fee. I guess it's part of the fee, or maybe their token. Like this is their liquidity
this
farm.
Is their offering.
They can't just make money out of thin air. There's a reason why.
So I think they have to take it from the fee. They have to skim a little bit of the yield or something. Like they have to have this money from somewhere. So they're probably just directing protocol profit towards protection.
Is the idea is that they're trying to make it easier on liquidity providers, I guess, to where they don't feel like they're getting fucked?
Yeah, I guess that's their competitive advantage. Right. You give WBTC, all you have to care about is hopefully you get exactly what you get back plus the yield, right?
Damn,
Right.
one more difficult thing for them to do was unnecessary, but yeah.
Yeah, I mean, I don't personally have I don't provide liquidity on
Yeah.
really any
So what
AMMs anymore. So
what happened in this case, in this Black Swan event?
they just paused it. They paused the insurance part due to
Because
market volatility.
prices are moving so fast that they can't possibly cover all that impermanent loss, right?
Yeah. So they're pretty much saying,
Obviously. Yeah.
yeah.
Crazy.
Which I don't have the complete picture, so
Yeah, it's going to be interesting to get more information on this as they kind of, I don't know, tell us what's going on. We're working on solutions to get the system back up and running ASAP. Oh man,
Interesting. Huh.
it's just interesting to see all these different protocols coming down, and yeah, I mean, I feel like it's just the start of something like this, resembling, the death of many projects that occurred before and happened time and time again.
So, I mean, Bancor as an AMM is nothing. I guess the only thing they're trying to outsell is their whole single-sided liquidity thing, right? Like, that's their quote-unquote yield farming strategy, right?
I guess, guys, one of the awesome things about the space is we can kind of just keep an eye and see what happens, and hopefully more information comes out and we can learn more about this. I know I'm going to be diving into this, just see what's going on and see what I can learn from it. Ash is kind of picking my brain too, like the idea of providing insurance. Well, what's backing that insurance? And it gets you to think a little bit, like, are they just magically printing this protocol, the insurance benefit?
Like a lot of the designs of some of these so I actually don't look at most of these things because it's such a pain in the ass to learn about them. Right. So, but it sounds like most of the designs for these DeFi products require scale, right? Essentially, it has to operate at scale for it to actually work. Maybe that's the case. So,
I got it.
Go ahead.
Okay, I'm looking at docs.
Yeah.
Impermanent loss protection is funded in two ways. One, Bancor's protocol-owned liquidity. So it's like a DeFi 2.0 thing. The protocol stakes BNT in its pools and use fees earned from its staked BNT to compensate users for IL. Impermanent loss. And then the second one is there's a protocol-wide fee confiscation of 15% of all trade revenue on the AMM, on Bancor's trading networks, and uses that fee to buy and burn and safeguard ILP.
Yeah, but that requires that 15% ratio at volume covers all of the impermanent loss, which you can't do that calculation easily, right?
Right. I mean, what you're just describing is DeFi in a nutshell, right?
Yeah, exactly. So the designs require it to work at scale.
Well, I'm gonna be honest, is like, as a DeFi person, if I were to guide these rules, it's like on their Black Swan events, it's shit, right? But like, it's a fairly, if I was there in shoes, it's like, to be competitive in the AMM space, like, this is a valid direction of attack. Try to solve the problem and try to get liquidity. Obviously, in a Black Swan event, it's been bad for them, and obviously, maybe there could have been better risk parameterizations and an expectation of a Black Swan event. I do see this as pretty interesting, like finding a way to direct protocol fees towards a directive utility compared to other AMMs, but that's also because I do have a all right understanding of the AMM supplying landscape. But yeah, like I'm on the position that we can decry these in the worst days, right? Like the shitty. I'm unfortunate, but like,
well, the best DeFi products are ones that work like the same way you can launch a game, and it doesn't require, like, you can still, anyone can play a browser game, right? It's like,
well, no, I say that you're completely wrong there though, because Uniswap doesn't like you need liquidity. Liquidity is something that is vampire tactable, and liquidity needs aggregation, needs to be placed in places, and that is a massive battle that's being fought out right now between all the AMMs and also private market makers, right? And like, as a hyperstructure, like these things, yes, you can do it, but we faced it with London DAO, right? Like the amount of liquidity calculations we had to do to figure out the APRs and like figure out yield farming strategies. This is a very tough science, and this is where, unfortunately and fortunately, where all the innovations with AMMs are, in my opinion, is
analytic tools, right? Analytic tools.
It is creating the risk parameter. Yeah, creating the risk parameterizations.
But I'm saying the design. Yeah, the design of this protocol is more similar to like a hedge fund, essentially, right? You're just like, all right, trust us, we'll stake our shit and see what happens, right? Try to cover all these.
Yeah, it's. I mean, obviously, it's kind of like a risk, right? You're like,
yeah,
we're gonna be a little bit more advanced than like a Uniswap. Cross our fingers, nothing goes wrong. Yeah. But then.
But ultimately, it's not really DeFi, right? It is like half CeFi DeFi, because I mean, you're relying on the team to like do shit, right?
98% of DeFi is half CeFi DeFi. Like, there's only an exclusive amount of things that are wholehearted DeFi.
Yeah, exactly.
Right, like if Uniswap stops, which they have already, right? Stop liquidity yield farming as a lab, like liquidity is just gonna start going into curve finance, right? Like curve finance brilliance is they figured out an absurdly good yield farming strategy, but I strongly believe the yield farming strategy was dictated by a small group of people,
probably,
that has representative power through its community, right? So it's like as I go back, it's CDC DeFi. Right.
So do they have things that are like, so what are the DeFi protocols are more similar to like a hyperstructure type of thing where it's tested, it's done, you know, there's no more, this is it.
Well, the problem,
product.
My take on it is you can't build a lot of hyperstructure protocols. Like, I think the system can be hyperstructure, but you need human controls, right? And I think especially, I think for AMMs, you can technically go out the door without a yield farming strategy. That's my opinion. It's like you can do a balancer and just pray, cross your fingers and pray, but they do have yield farming now. But then, like, let's just say you want to create a lending market. Like, I cannot conceive of a really great way to create that in a hyperstructure, because somebody has to set the risk parameters of collateral and loaning, right? And that has to be governed in some capacity, right? Or else you're not stay competitive, period. Right, like if say Odd Finance say, hey, you can borrow 90% of your ETH in USDC, and you're still stuck at 75%. Nobody's gonna borrow from you, right? Like, because you have less credit on your protocols. Then who's gonna change it from 75 to 90, right? Like, there has to be
I mean, there's
there's
a difference between the competitive problem. Of course, you have to do shit to stay competitive.
But then, like,
theoretically,
it's not a hyperstructure. Then it's not a hyperstructure.
Yeah. Like, so, but theoretically, you could do it, right? So, someone just set it at 50% or less, or something like that, and somehow people start using it.
But then it's like nobody uses hyperstructure. Right?
Yeah. But theoretically, people could.
Theoretically, you could. That was I think that was the promise of DeFi to an extent. But even Uniswap figured out by V2 or V3, like they couldn't quickly just do that with like how V1 was designed.
Okay, well that makes sense. Yeah.
Interesting conversation, guys. You guys want to move on to the next article?
Yes.
So I'm actually excited to talk about this one. I didn't look into it either before getting on here, but I know it's going to be interesting. So it looks like Solana Labs is launching a mobile platform and smartphone, which is going to be really interesting to see, how many other companies actually follow suit here and what happens.
Is there any details on what the hell?
So they created
Solana mobile stack.
Yep. An open source software kit designed to enable the development of native Android apps built around the Solana blockchain. And I actually find this kind of crazy, this little detail here. The kit includes the mobile wallet adapter, a protocol for plugging in mobile Solana wallets. According to the firm, this feature will work on all mobile devices, not just Android ones. And then another little detail that has me questioning if I'd ever use this device. The seed vault, where you can store your private key and seed phrase on your device. So your Solana seed phrase on your Solana device.
I mean,
It has to be a
ultimately,
hot
these are
wallet.
all
You can't do
yeah,
cold storage.
like these are all software solutions. Why even make a
Oh.
device, right? They can just be shipping code.
Well, I think that's their main thing. Is that maybe they'll find a guy to make a phone, makes a phone for them? Like,
yeah.
this
Let's
honestly
see, they
sounds
mention
like
it.
But it's such a waste, right? Because you have to worry about like it's such a pain in the ass to make a phone. You have to worry about logistics, right? And manufacturing.
this really sounds like to me is like there's a company that has way too much money and doesn't know exactly how to
Fucking
deploy that
hell.
capital.
It does sound like that. Yeah.
Like, if they spent all this fucking effort on just making software, then we would be in a better place. Why waste your time doing the hardware?
So, right, I've
Because
skimmed
iPhone
another.
has secure, like iPhone has secure enclave. It's not a there's not a new concept. iPhone's been actually innovating at hardware level, security for a long time. I mean, if you ever done an iPhone to iPhone transfer, I mean that shit is next level, right? I don't know, David. Do you remember? It's like a bubble thing.
Yeah,
It's like yeah, it's insane.
So I've read counter argument threads that people are trying to support. And
Great.
I
What did
see
they say?
some merits in it, and I am almost on the position that I'm such an ETH maxi that I may be blinded by things. But some of the principled arguments I think are pinned on the concept that to onboard the new Web3 generation, we need to create more and more consumer-facing experiences that are more closer towards what they would expect in a more Web2 context, which I feel very mixed about as a theory in general. But it does play into like the whole Solana's like the blockchain for the internet kind of like a sale pitch.
Yeah.
But I don't know. Like, what do you guys think about?
I mean, I think the coolest thing with phones, really, to me, is the ability to run nodes. If you can't do that, like that's really
Right.
where the innovation needs to go. Like at the mobile device level, you need to be able to run.
Yeah,
nodes.
Solana nodes are pretty expensive to run on Metal.
So it's going to be
Yeah.
so. I'm really interested to see what things people do around that. If I don't know if there's anything at hardware level. If you just have huge ass 2 terabyte.
But I mean, if you just say let's throw all that all that
Yeah.
aside, we're just talking about consumer Web3 theory. Like
Yeah.
is the plan of attack to make it Android OS that has like a baked-in Phantom with like a MetaMask style seed vault somehow embedded in there? Like
Seems like nah. I don't know if that's a solution. Really, doesn't make sense to me.
Yeah.
Is this a reaction to Apple Pay, Google Pay? Like, is it like mobile OSs are baking in financial layers at the base level? So for them to be competitive,
too.
right?
Yeah.
Is it to be competitive at that parity that they're saying we got to own that vertical as well and create a base layer Solana based settlement layer? Is that like how they're thinking about it? Like, I'm trying to give them benefit of the doubt because I know that I read the highline and I'm like, fuck that. It's like that's dumb.
Payments to me, I mean, I know payments pretty
Ash,
well,
go ahead,
right?
yeah.
So like, if you want to get adoption, the problem is not really just getting distribution, right? So for like Apple Pay is interesting actually. So in Australia, I think they have around 96% saturation.
What do you mean by saturation?
As in 96% of terminals in Australia have Apple Pay.
Oh, okay.
Okay, so in US, those numbers are definitely not there. I mean, look, I may be completely wrong about this, but this is like shit I read 2 years ago at BitPay. So I know in US it's much lower, right? And two, if you look at the general sentiment around people using Apple Pay, half of people older than us are like, nah, I wouldn't put credit cards on my phone. Fuck that, right? Half of those, half of people are just say something like that. But in reality, it's actually way more secure because it's generating a new credit card number every time you pay. So anyway, okay, tying it back to payments, the problem is not just software to pay people. It's a social component, right? You have to receive money. You have to be able to receive money, really. That's the thing. And so payouts, like payroll type shit, like there's no company I can't believe any company has not really like dived into that yet. Like Coinbase could do it, actually.
Do you think they'll yield farm it? Do you think they'll yield farm their OS?
Oh God.
It's probably gonna have some yield farming shit. 100%. Yeah. But yeah, like if they make it easy for businesses to accept and receive payments and do payouts and stuff like that, then I could start seeing some weird stuff happen. But
well, they got to make a network that doesn't freaking break, right? Like,
yeah, first and foremost, yeah.
I was like joking. It just was like unexpected banking holidays on the Solidity network.
Oh God.
But
I mean, it's interesting. I think it's cool, the hardware stuff. But.
Like,
yeah.
So I want to ask all of you guys, because this has been something that I've heard so many places of argumentation. It's like, is Web3 successful based on its TVL or based on its unique user count? Like, is Web3, like, is there an argumentation to say that if it can disrupt the traditional finance through TVL power, that means we have more power over the world through our interest rates dictating Web2 interest rates? Or is it like there's 3 billion new users and that gives us power that way? Like obviously you need a bit of both, but like.
Yeah, just chime in here.
Always about users. Yeah, definitely always about users, I think.
Yeah, I mean, even now, just considering the TVL with the lack of users for these applications, like a lot of these networks are small, even compared to like a moderate size application on the App Store, right? And so, yeah, you know, I would imagine that because of what DeFi and what crypto enables, that with an increased number of people, we just have more potential and more power to have more liquidity. I mean, just look at the farming methods out there that exist in DeFi compared to TradFi, right? So, anyways, Ash, you had something to add. I want to let you speak.
Oh, nothing's. Yeah, no, not good.
You guys know about Stello? Like, I remember Stello was all about being like a blockchain for the unbanked. I think was their original pitch.
Yeah,
like, I don't quite know what that means. So
yeah.
Never looked too hard into them, but I remember they were hiring a lot.
Yeah, same. I applied as an intern before I got the job, but
yeah. But do you know what they? It's probably just another chain, another side chain, EVM compatible, same.
Yeah, I know that Xerox API has Stello support. So it has to be EVM based, or not EVM based, but compatible.
So I read something recently. Go ahead.
I'm just gonna say, you didn't say Stellar, right? You said Stello.
I said Cello.
Yeah, CELO.
Oh, okay. Yeah, CELO. I thought that was cello.
Yeah.
Anyways, go ahead, Ash.
Yeah, I was saying I read something recently about Coinbase acquiring some like liquid staking company, something, and I think they're basically interested in providing institutional grade liquid staking stuff for bigwigs, which is very interesting. It means it sounds like it's kind of going back to this earlier conversation of highly controlled and regulated markets, right? for crypto, basically. That way they can prevent these whatever types of things have been happening recently.
I'm actually very curious on that note where we're going to head within regulation, because right now every nation is kind of classifying crypto differently. Like there have been recent calls on think tanks to put out frameworks to the G20, for example, in order to create some sort of like a universal framework for crypto. But in some nations, you have it classified as property, as a security, as a currency, depending on the crypto, of course. And obviously, they're mostly looking at Bitcoin, right? But I am very curious to see where the regulation goes. And then just to think about like regulation within the context of having a hardware device, as we were talking about before, like that's going to be really interesting to think about, like what constraints you're going to have within that device you have. And what you can do with it, and how they create frameworks to kind of create that isolated environment where you have to operate within regulation. Because right now you really don't, right? You can be told that if you're from the United States or Canada, you cannot use a software, and you can still go ahead and go use it, right?
I mean, did we ever talk about it? But during the whole Ukrainian thing, didn't some nodes stop service to Russia? And Etherscan also a similar
Oh, really?
situation? I was reading about this.
There was a lot of dApps, and I know that Matcha is part of this group that
Mhm.
has IP blocks. Actually, in
Yes.
fact, most hosted
Interesting.
dApps do have IP blocks. And they would have to, especially if you're a US-based company, you have to abide to sanctioning rules. And that doesn't mean you can't use the dApps if you like gotta have an IPFS build,
Yeah,
but
VPN.
if you go on a Matcha.xyz and a Russian IP, you probably not be able to access. And like North Korea is one of them. Then maybe Iran. I don't remember.
Yeah, so it's like the business is getting cucked is what causes all these problems, I think, mostly.
Yeah.
Not the user end. Yeah.
Like for me, at an assetization level, if Bitcoin and Ethereum stays as commodities, not securities, commodities,
Yeah.
I think there could be positive regulation that can happen. But if we are starting at the basis that there's securities,
Slippery slope.
that's a very slippery slope.
Mhm.
Yeah. At least
But,
I'm
I
saying
mean,
this at stateside. I'm saying stateside. I'm
even-
not implying anything else.
Yeah, but even government people want to make money, right? It's like I think it's only in countries that have weaker or more risk, basically, in their economy, like India, that took hostile attitude towards crypto, or like China, right, where they just want control, basically. Everything's on WeChat, WeCoin. But
I mean, they are
for us-
creating their own distributed ledger, like digital
Yeah.
yuan.
Yep. And
Wow.
but for I think U.S. government is still relatively self-serving, as in everybody in there just wants to make
Yeah,
money.
I joke, but like
Mhm.
one thing I know that other than gravity goes down is that the government will work for themselves sometimes, most of the time with lobbying systems available.
Mhm.
So
It doesn't threaten the strength of the dollar, actually, for the most part. If anything, it only enhances liquidity for them. It's like, how big's the U.S. dollar market cap? 10 trillion, right? So
it's like consumer protections at this point.
Curious
Right?
what it is
like,
now.
Like the whole SEC was crafted just to stop people getting screwed over by 4 or 5 people manipulating a security into a price performance, right? But then like we've seen in this bear market, like even with a commodity, like it doesn't take many people to go and manipulate, right? And with a blockchain with positions so publicly available, like the fact that we saw like as ants seeing giants trying to manipulate a liquidation to happen. We're just like, what the fuck? This is like gods being like, this is like a pantheon of gods like fighting, right? Like, so I don't know.
yeah, for real.
But I think it gets interesting when we start seeing like sovereign coins come out, and how they want to position themselves in competition against decentralized stables. But I'm gonna be honest, we're not doing a great job with decentralized stables as an industry. It feels like DAI is kind of not
popular at that point.
and used.
Yeah.
And then we had the implosion of all these different coins. We're really kind of leaving a good vacuum that I think a sovereign coin can come in, I guess.
what's
but
the
then
point
it has
of,
to be USD based.
Like, why have a decentralized stablecoin? What is the thesis behind that? It seems kind of like unneeded. Right?
Well,
like,
USDC can blacklist you. That's as simple as that. That's why you want it.
But I guess
that's you get to spend.
But that's a problem. That's a larger problem to do with privacy and protocol design, not market, right? For like, I think that, like, I don't know. It's like I feel like, yeah. So it makes it makes sense to have Ethereum as like a currency or something like, or these digital sovereign coins are kind of just on ramps, basically, right? Easy swap. I mean, that's the way I see it. Basically, there's on ramps essentially. And moving money around quickly, getting one-to-one back.
Yeah, I guess it circumvents
exchanges
the
and
current
stuff.
settlement networks.
But like DAI, what is the why have, like, if that's the only real reason, right? So you can't get black.
Well, that's a very powerful reason.
Yeah,
this is a very powerful reason to know that your money will never be taken away from you due to whatever behavior you participate in. Like as Americans, we and not gonna dox you, but as a person who lives in a first world country, the wizard,
Mm-hmm.
we don't. I think we don't see the fatalities of a asset that we have to use on a day-to-day level being regulated. But like if you're a Chinese citizen and you're using yuan, you can't get that out. You can't get that out the country pretty much.
It's very hard. Yeah.
Right. And so to that point, you're just working with a political climate that has a very strict access and liberal use of a blacklist model for the currency. Right. For us as Americans, we don't have a precedent, so we don't feel that pain. But I feel like it's a little bit too first-class citizen of us to prescribe that that's not needed, and that's why I think Tether is so prevalent in Asian markets, USDT, because it doesn't have a backdoor that the U.S. government can come in.
What is the mechanism of blacklisting for a situation like the way it is in ERC20 land for USDC? Is it
they just go on chain and say this address, can't move it, and then they have a revert, right?
Really? Okay, so there is
your money's a frozen, right?
I see. Okay, that's what they do it.
And they haven't used it yet in abidance to government pressure, as far as I understand it. But like, isn't that what DeFi is all about? Is we're not going to even give you a backdoor. But then I say that, and I'm literally thinking about Bancor, and like myself in the head.
Yeah, it's like you can get blacklisted in many directions, right? It's like for Bitcoin, I remember back in the day, if you shuffled Bitcoin, you would get blacklisted from Coinbase. Yeah.
Well, that's Coinbase being blacklisted, but you're not blacklisted from moving your asset.
From moving the asset, exactly. Yeah.
Right.
So,
but that's like that's the competition table, right? Like as an American, I'm happily going to use USD, given that I don't believe I'll do anything fraudulent, and I don't think the climate will change in such a negative way that I have to be scared of my USDC. But I don't know. We're trying to build a system that doesn't care about your country or origin, so we have to hold ourselves to a high standard.
Yeah. Basically, what I'm saying is like if you had like a Bitcoin-like system, right, and you tried to create a token, a DAI-like token, there would really be no market for it because there's no.
Sorry, say that again.
There's no real way that someone could freeze you, right? Like if you try to make DAI like on a system that's not ERC20 that has stronger privacy,
market for it, right? DAI doesn't have ERC20 doesn't have a backdoor.
Yes, it's not ERC20.
USDC made a backdoor in their contract, so ERC20 don't have a backdoor.
Yeah, but the thing is that you can blacklist by address, right? That's really what it is. That's the problem.
No, but that's a USDC thing. That's not a ERC20 thing.
Yeah, that's not a ERC20 thing.
Okay. I just want to clarify that.
Yeah.
DAI doesn't have this problem.
Yeah, DAI doesn't have that, but I'm saying they're able to do that design. USDC is able to do that design.
Yes, and not able, they did it, right?
Exactly.
Yeah. Okay. Yeah, I don't know where I was going with any of this. So
it would be honestly pretty awful with that in mind if USDC became the dominant stablecoin in play. And when you look at Circle, the organization behind USDC, I mean they have a lot of authority. They have a lot of deep pockets. They have
huge lobby.
They're in touch with the right people. Yeah, and I mean they just based on reputation alone, I know many people seem to have more trust for them than Tether. Dave, you were talking about Tether a little bit before. I'd be curious to get your insights on Tether and what your thoughts on Tether in general are, I guess, as a trusted stablecoin.
It's, my opinion is very mixed history. The fact that they have corporate paper backing is the very shady part. But also they don't give public audits from a third party that USDC does, at least. That's a little bit shady as well.
I mean, it's obviously like they're doing something wrong then, right?
Right, but like as a fractional reserve asset that has somehow stayed to its peg for its duration, which is longer than USDC, it's done well. It has legitimate use in the Asian markets, but also I do strongly believe that with the emergence of USDC and even to a degree BUSD, the Binance derivative, we're seeing like a competitive shift where like Tether recently released a blog. They're saying, "Hey, we're like our long-term goal is to get the hell off of corporate paper, right?" And they wouldn't have a reason to do that, I think, if it was not for fully collateralized stables being a competitive product against them, right? So we're, as a consumer, I think this is a good thing that we're seeing a competitive stables coin market where these centralized stables are fighting against each other to build the best stablecoin product. And I feel like that's a good thing for Tether, right? Is I don't know if they have to do any magical financialization.
Well, so what would happen? What would be the theoretical here, right? So let's say Tether does get audited, and we find out that they were doing something bad, right? They're literally printing money or lending out money at very cheap rates, incorrectly, and stuff like that, and stimulating the market.
It depends on the bank. It depends on the FUD, right? Because it's like a bank, right? Fractional reserve ratios, but then central bank tells them what the fractional reserve is. So, I mean, it sounds like they have treasury bonds, a pool of liquid USD, and then corporate paper as their three main collateral assets for the stablecoin.
So I never touched Tether in my life. Yeah, not even once.
I've used it a little bit every once in a while.
It's been around for a long time. So.
Yeah, but
I haven't used it either. I don't trust
it. So if they were to, let's say it did collapse, right? Let's say like Tether's just everything run on bank, classic stuff.
Which is like, I mean, way back we had this concept of the Tether bomb.
Yes.
Right, which was
it's still there.
It's still there.
Yeah.
It's principled on what you just described, right?
Yeah.
I mean, isn't Luna kind of what it would happen? Right? Like it
basically
had a stable, it imploded. A lot of markets had to go down with it. Right, a lot of whales had to sell at really crappy prices. Like, I wonder if Tether really has a bank run occurring. Like, are they gonna have to start dumping like treasury bonds, like in a way that just to recuperate enough USD to sustain their draw rate? Because I don't know, corporate paper sounds like really to me is like BitMEX gave a loan of money to Tether. It's like, here's some money. I'm going to print a fake deposit for you. And if you need more money, BitMEX got you if BitMEX is liquid, right? Like it, but like, it gives me like a little bit of like Celsius Luna vibes, but it's so big. It's not yet.
Yeah. But people have been talking about this bomb forever, right? Forever.
Oh yeah.
People always talked about it as like this crazy event that would happen after Mt. Gox for Bitcoin, you know, like Mt. Gox is a huge black swan event basically, and then they're saying this one would be like the next one. So let's see what happens.
Right. Yeah, a lot of people saying it was going to take down, Bitcoin with it kind of thing. We can move on to the next story, guys.
Definitely. Yeah, Harmony Protocol. Shit.
Yeah, this is crazy. Dave sent this to me right before we jumped on, so haven't had a chance to look into it. But I mean, even just hearing the news, it's a damn shame.
Yeah, rest in peace, a bridge.
205 multi-sig classic, dude.
Problem is.
Yeah,
Jesus
exactly.
Christ.
Rip.
Jesus.
Yeah.
My understanding is these two were hot wallets. They
No
weren't cold
way.
storage wallets. They had because
God.
they had to have them running on a server.
Dude, these guys are sick fucks.
To do the bridge thing, right? Like it.
Yeah, I mean, of course, right.
And so I can give them a little bit of color because I wasn't working on this directly, but Zurex does have a lot of great market making software that they have
server-side
experimented and learned, and all server-side infrastructure. But obviously that implies you need to have a hot wallet that has a significant amount of money on it that an algorithm has to be able to control and trade up and down, right? So you can imagine the security work to make that work was obscene. Like the amount of security risks.
Yeah.
There's also OPSEC there, right, for how you manage that box server side.
Yeah. So there's like delegated boxes. They have dedicated virtual machines that has a private key, and you have to get like a share. You have to get like a temporary key to access that private key to sign you a transaction. There's this whole engineering endeavor that I have an immense amount of respect for that team that has done it.
Yeah.
Now I don't know if Harmony has went to that extent, but like 2 of 5, that gives you 2 attack, like pretty much gives you a rather easy attack vector, given that this is a Web 2 hack, not a Web 3 hack.
Yeah.
At least that's
I
what
mean,
I
most
think.
likely they compromised the boxes. That's probably what happened, most likely, right? And I
Yeah.
mean, Coinbase also, because I was on the security team, saw the diagram and a full rundown of their infrastructure, key exchange infrastructure. So very interesting stuff, especially at that scale, right? At that scale, it's ridiculous.
Which is a shame. $100 million, unless Jolt Cap, what was that company? Jump Capital comes in and it's like, here's a free $100 million. Keep it up.
Oh God, keep up the good work, guys. Just remove those 2 bad actors, and we're good.
Yeah, we're on to the next sprint. We'll forget about this one.
Oh God.
Who bailed out the wormhole hack? Was that also Jump?
Crypto, and maybe somebody else with it, but they wrote a check and said, you know what?
Yeah, I just don't even know how this happens, guys. Like, do you think this has anything to do with maybe, prematurely bringing people onto your team that you don't know if you can fully trust yet, kind of thing, or maybe they were new? I have no idea how this could even occur on a trust level. I think
it's like security culture. It's really about security culture. Like, you need to have an organization that like takes no shortcuts on those.
Mm-hmm.
And I know that at the studio, we obviously don't have to manage funds to that extent, but like we are like pretty stringent about very basic rules, like our hot wallets.
Right.
Those, like, we have to have an expectation we will one day maybe lose them, and if that's the case, we have to be capable of surviving such an event. We all are on hardware ledgers. Every single piece of code that we write as Solidity will and have to be written with test code, and we do have a design restriction that we don't do things that have way too much money on the line, because we're not a firm that goes out and gets audits every day. We don't have the money and time to do that, so we do restrict ourselves in those sense. Right, but like at 0x, and I think you can say this about Coinbase as well, like having a security culture that like every step of the way questions it. And then I was at Visa for like a summer. Holy mother of the fuck! Like there's not a single decision you can make there without 10 people scrutinizing your security design of it. Right.
Oh, really?
And it's so hard to get anything through the door, because they're like, what if this happens? What if that happens? What if this happens?
Yeah.
Right. Like. And then there's a lot of testing infra just to make that thing, for one, never be hacked, right? And then like Visa's like network of like servers, they're all hard linked through their own private wires. Like they don't go on the internet to transfer their data between their data centers. It's literally just like their own proprietary data links. And so it's like they went 9 yards, but like to do that, you need a security culture, right? And I'm certain that Harmony has one. Now, we don't know exactly how they got hacked. Yeah. But it seems like maybe a potential attack vector was not thought about, and that could be a reflection of junior engineers or junior experience. And we have seen this like with the Zora protocol.
Really small things, like you never know. It can be like this dumbest thing, like. Let's say,
Ash, you could speak a lot about that, right?
Yeah, because like, so any company that deals with payments generally is extreme about their security, right? So it's very common in credit card payment industry. BitPay was very much like that. I mean, I remember watching a lot of videos about old credit card, how they used to do the old credit card scams and stuff, and like skimming data. And the first people to sell it online at mass scale, and they figured out the kind of exploits they figured out. Anyway, what was I saying? Yeah, small things. Okay, so I try to imagine what's the case here, right? So if you're running like a multi-sig and you have like maybe 2 separate boxes, and let's say you actually do a pretty decent design, you do all the stuff you're supposed to do, but then one person forgets that the box, someone has admin control over the box somehow.
Like an SSH key.
Yeah. So like some SSH keys lying around somewhere, and then someone sees that key ping. And they figure out who it is. They're able to like find that guy's account somehow, and maybe their password's backed up to Google, or something like that, or Apple iCloud or something like that. And so it's very easy. Like once you kind of trace all these different things, to, like,
it's a social engineering.
Yeah, it's social engineering. It can be all kinds of like small things like SIM swapping and and whatnot. And next thing you know, like trail of events occur. So
Yeah, I mean, it's unfortunate.
or possibly even targeting a module. So like if you know someone's in a node environment and you kind of have a rough idea of what kind of packages they're using. So this happened to BitPay actually. This is called a Copay NPM module hack. It was with a package called FS Events. Basically,
Okay,
a
that
sub,
sucks.
yeah, sub package of FS Events was taken over kind of randomly. Like for some fucking reason, the guy who maintained that Git repo in the npm like package publication transferred ownership randomly to some guy, and then that guy basically added some small amount of obfuscated code if wallet balance greater than 100 Bitcoin transfer out. Right.
Oh no. No.
Transferred to this address, and now I don't recall anyone actually being affected by this hack because I think anyone who had 100 BTC would be on multi-sig and may not necessarily upgrade to the latest up version. And if you're on multi-sig and you keep one wallet always on the older version, you'll never have this problem or stuff like that. Anyway, you never know. It can be the tiniest entry point.
So
but I mean, yeah, when you have a lot of money on the line, people are willing to do it. There's motivation.
Yeah.
It's gonna be a constant battle. We learn from them, they learn from us. They'll fight the Cold War with a few heated moments.
Right. Yeah, it's just interesting to consider how. I mean, I guess in general there needs to be a greater security culture probably within this space. I mean, time and time again, we're watching people, repeat history or rhyme.
Like I give a lot of these teams benefit of the doubt, given what they are, hacks wise, dependent to what they are, but this is in part, I think, a causative problem of like needing so many new hires to join the space.
Yeah.
Right. Like all the guys who are quite experienced as builders, they're leading teams. They're half retired. They're angeling or a venture cap partner. Right? Like they're doing great things, and so we've seen this with a number of protocols where they have left exploits in them that I think if we were to bring that up to a more experienced engineer or Solidity code developer, they would say like from the first minute that this is a crappy design. You can't do this. Like we've been here before. Right. And so, I mean, it's a growing pain. It's unfortunate that you can't like generationally. We're not doing a great job generation passing down institutional knowledge that we've grown into. Certainly it's happening, but I guess it's not happening good enough to prevent such hacks from happening. But there's a lot of teams that they say like, what do you need right now? It's the first thing is usually senior protocol engineer, and you're like, that's a unicorn of a unicorn of a unicorn. Like, you're not.
No doubt.
Those folks are the hardest guys to find, and if you can find them, those are like worth, quite honestly, 10 to 50x junior engineer, because their brain has seen. They've seen shit. They've seen the stuff, right? And
there hasn't been enough migration of like engineers from centralized finance to like Web3 stuff yet. So there just isn't enough talent there yet.
On that note too, I wonder how many of these young teams can even afford a senior engineer like that. I mean, you have
to have a lot of purchasing power to get one of them to come along.
Yeah.
But I
you
say
have to be a senior protocol engineer. I mean, like that's really
I think
ideal.
It's like half and half. It's like I don't think there's a lot of teams that know how valuable these people are as newer generation teams.
Mm-hmm.
And then the other half is they're too expensive. But then like I've chatted with some people that are leading teams, and they're like, I want a senior developer, and I will go through heaven and earth to try to acquire one and have them work full time for our team. But then there's some teams that are just like, we just need somebody who can sling out React Solidity code, and then we'll have audit firms cover the rest of the part.
Look at Zora. I mean, Zora's a prime example, right? It's like those guys. It was founded by 2 Coinbase employees, Jacob and I forget the other guy's name, but both were product managers.
Mm-hmm.
You know, it's like maybe they know a lot of people, like good engineers, and maybe they're able to drag some people from Coinbase. But there's only so much they can cover their backs, right?
Yeah, absolutely.
And Dave, you're the one who told me, right, that 0x had to come and rescue, right?
Yeah, they had an exploit. I'm not
Mhm.
going to go too much in details because I think they're trying to also keep it on the low down. But
Mhm.
like,
Yeah.
it's an exploit that technically is not a failure of the protocol, but a failure of understanding of how the blockchain actually works, in the sense that your transaction has to go through a mempool, and that gives you an attack surface. And which, in my eyes, is kind of like, if you built a DeFi protocol before, you know well and aware that that is a really big problem space, and you would do everything in your power to also engineer against it.
Right.
But then, like, again, like, to me, is like, I kind of give a little bit of like a jeopardy to hacks that are fundamentally so novel, right? Like, to me, when
That's good
flash
stuff.
load
Yeah.
attacks just started, like
Innovative.
who's gonna think of like YOLOing $400 million, crashing a market, creating a short position, taking your profit, returning $400 million, all in one transaction, right?
Yeah.
Yeah.
And so obviously we quickly reacted as protocol teams and built quite a bit of infrastructure to do that. But then we're also seeing this in the NFT world to an extent, right? When there was airdrops or Bored Apes, people like flash loaned into like NFT.X and
Yep.
drew out all the
Right.
NFTs and did that. So what happened was, when Azuki came out with their NFTs, they actually baked in a time lock where you
Nice.
can't flash loan claim assets from that NFT.
It was good
Right?
thinking.
Like, and in that design, people couldn't do what they just did, right? So we're already seeing like a competitive, reactionary market towards design.
Yeah. Hacks
And I
are
wouldn't say
innovation.
the Bored Apes thing was a hack. It's not a hack. It's a
It was a
brilliant.
very clever move, though. Like, whoever,
Yeah.
you know what I mean? Like, that person clearly
Five-head
won.
gaming.
Yeah.
I feel like whoever can code and build flashbots wins.
Yeah,
at this
I'm
point.
just like, golf clap. You did
Yeah.
well. You played the market. Like, I
Right.
have a lot of respect that you pulled it off and you got your transaction through. That's also impressive, because there is a lot of bots that
Yeah.
literally all they do is they look at your transaction. If they see that you make a fuckload of money and it doesn't require ownership to do it, they just front run you, right? Like, they just front run your transaction, right? So,
You never did any of this bot stuff, dude? I mean, you guys worked on it pretty well, right? So,
personally, I've never done bot stuff. I've actually wanted to,
yeah,
and I still want to for a certain protocol. I'm not going to say the name of this protocol, but I do want
Please do, though.
It's not a hacking bot, but it's more like a bot that may be able.
MEV.
Yeah, it's like an MEV bot. It's a flash bot. And I'll just say I want to do it on the Ben protocol.
Nice.
But like the Ben protocol, which I've actually said in their forums. So Ben protocol is like a loaning protocol, right? You have to collateralize your asset, but then to do that, you need to have a way to sell it, liquidations, right? But they come to realize is the liquidation gives a benefit, like a 5% bonus to the first person who bids on that asset. So they're saying, hey, I incentivize you to be the first bidder because that guarantees that the protocol will be solvent. So I was like thinking, it's like, why don't I just write a flash bot that if I can pick up a transaction that is doing that, I come in and I snipe a bid right before him. I take the 5%, he outbids me, I get my money back because he outbids me, and I just take a free 5%, right? And this is like, and I'm thinking about writing that kind of bot, but then I realize that you have to like, there's a very slim margin of where that bidding ratio is. But indirectly, I think writing a bot like that is a positive for that protocol, because I'm becoming a sophisticated actor trying to be sophisticated on a system and teach the protocol also how to prevent people like me from being too exploitive. But half and half, right? But
There's
I don't
a
have
term
time
for
to write a
this.
bot.
Yeah. There's a term for this, right? It's like called something testing. Yeah.
I was gonna say
Anyway,
fuzz testing, but that's not fuzz testing.
No, it's not fuzz testing.
It's really interesting, though. Dave, I'm just looking at the time here, and I'm wondering if you wanted to dive into that last article you just sent me here.
which is
I'm gonna pull it up for you here.
oh yeah,
About
I'm just gonna keep
3AC.
this. I'm gonna keep this brief, which is a bummer. I completely forgot. I wanted us to talk about the acquisition of Gem and also of Genie, the NFT aggregators.
Oh,
by
who bought
OpenSea.
Genie? Oh shit.
I think those are two pretty big news, to be honest, for our
Yeah.
actual industry instead of shitting on DeFi for an hour.
Yeah, those are pretty big.
Yeah.
But TLDR is we expected this. I think that if a 3AC goes down, it will bring it down credit loaning businesses around them with it, and that is where I think the actual damage will probably start really happening with the 3AC implosion. Is if 3AC goes down, whoever gave them really risky credit lines, they're exposed, right? And
Right.
it seems like this company went bankrupt because 3AC went down and they're now insolvent and bankrupt, Chapter 11, because they made a loan, right? One bad loan knocked them down, right? So it's unfortunate, but
Yeah. I'm just looking here if I can.
Nice. I was checking the Genie airdrop. No, nothing.
Yeah, that's really interesting. I mean, I'd love to shit on DeFi too, but Genie.
Genie is bought by Uniswap.
Genie
Right,
got bought by
Uniswap.
Uniswap? Oh.
Yes, and then Gem
Wow.
got bought by OpenSea.
OpenSea.
I keep on
And
getting
that's
these
just a team.
confused.
That's just an acqui-hire, basically, right? What is Gem again?
Gem is another Genie competitor, but
Oh, really? Okay.
I've heard I don't use Gem, but I've heard that Gem is a lot better than Genie. That's what people tell me.
Really? Interesting. Okay.
So,
Interesting.
but yeah, I feel like it's interesting to see aggregators now being taken off the market pretty much, right? And so yeah, I'm a big Genie user myself. I prefer that over OpenSea, honestly.
Yeah.
As an interface of choice. But yeah, so like teams are buying these things, right? And I think that makes a lot of sense, right? You know, we're seeing a world where there's the looks rare, there's the, you know, all the different like Zoras, there's the foundations, there's the NFTXs. Yeah, having like a, what do you call this? Like an Expedia in front of it. Like this makes so much more sense. Like this makes like Matcha made a lot of sense for DeFi aggregation, but like Genie made more makes 100% more sense in an NFT world where liquidity is so fragmented, right? And also so different on different marketplaces, right? Because some places can literally sell like a 5% below floor compared to your current market, right? And that could be a simple arb, right? On certain pairs.
I've noticed you can still arbitrage on Genie though. I mean,
yeah,
if you keep an eye on floor prices, I mean, you can make some pretty good trades on there.
Yeah. I've seriously thought of like doing an arb bot with Genie, but again,
really,
proof of beauty demands time. I don't have a lot of weekends to just YOLO build a bot that I put. And also, I don't trust myself in putting a lot of money in a hot wallet. And then saying, all right, you got 40K.
If you could
knock yourself out.
Flashbot could be useful for the business. Just keep it running, you know.
Yeah. Gathering
I'm not opposed
liquidity
to that.
for us.
I'm not opposed to that.
Yeah.
You might have to get a little dirty here, you know, a little DeFi shop. Okay.
But I will say that most good teams out here, like they don't say it out loud, but in private, since these guys are like degens as well, they're doing degen things to make money. Like it, which is
totally
perfectly sound. Which will we do it one day?
Probably more likely than not.
We'll see.
If we do, I don't know if we actually do it and we make a lot of money. I'm gonna be very honest and just be very transparent. We probably won't tell you guys.
We'll see about that.
Because that's an information thing, right? If we tell people, then we lose our profit.
Oh, yeah, exactly.
Like, any centralized entity that does it, like I'm just saying, I've been in companies before that, or been around people that like
doing
this information is money, like it is, right? Like, and to reflect upon that we're humans, being humans that want to make money.
Mhm.
I'm not saying we're bad people, and it's more just, you know, I already gave out a few. I already gave out a few Flashbot ideas. I don't know if they're actually profitable yet. So
yeah, I mean, like you said before, right? It's like actually doing this kind of, especially with Flashbots, and basically it's like penetration testing these protocols, right? And if you're able to identify something like a place where it makes sense, I think you kind of have to. Someone has to do it, right? This is the way I see
it's
it.
money.
Personally.
It's
Yeah,
freaking like
someone
money
has to
online.
do it. Yeah.
And I mean, bots are good for the behavior of these protocols. I think they're sophisticated actors. Sophistication allows protocols to be more strong. And
Absolutely.
yeah. So let the world go crazy about it. But, indirectly, I guess it kind of happens in the traditional Web 2 finance, TradFi. Like, there's a lot of high frequency trading bots, a lot of algorithm based trading systems and bots, pretty much. We just are doing it in a different environment, right? But
Yeah, I mean, I feel like centralized they do probably much sketchier shit, honestly.
We know
ERC
that.
billions?
Yeah,
I mean,
yeah.
yeah, very true. Well, guys, it looks like we're at an hour and 6 minutes here. We've had a lot of different things to talk about. I'm wondering if any of you guys want to, add something before we close up here, or if there's something we didn't talk about that you'd like to talk about for a minute.
I know that we didn't talk about the studio a lot, but the studio is a buzzing right now with a lot of crazy things going on. ABF is going to really start going out the door, I think, in the coming weeks. We're going to start really revealing it. We got another great project from Ash. We got a lot of things planned afterwards. We have BitWizard on board, really kind of helping us in all manners of studio things that we didn't even need to do help, starting with the podcast. So
exciting news is Matt Castles is in the ABF Discord. I think that's exciting.
Nice.
Yeah, so we're trying to get it out the door to the right folks, and so
all the generative artists, anyone hit us up. P4, I sent it to him as well. Just on the ground work.
Yeah, posted our link to Discord here. So if you'd like to join the conversation, make sure to join our Discord. And if you're interested in ABF, hit up myself, Ash, or Dave, and we can see what we can do to help you. ABF is going to be really awesome, guys. And I know Dave's been really putting a lot of work into making sure that it comes out and ends up being something special. So yeah, join the combo.
Yeah. More to come for the rest of the year.
More to come is right.
It's a jam-packed year, so.
And next time we will do a NFT.NYC event right here in this apartment.
Awesome. Well, yeah. Well, guys, that was another good episode. Kind of different than our last couple of episodes, but it was nice
huge
to
level
kind of
up. Huge level up.
Yeah, huge level up.
Still getting used to some of the format here. I will say that just based on how it feels to operate already, I'm going to need a few things. Like I'm going to pick myself up a Stream Deck because that would save me a lot of clicking and switching between windows. But in general, I'm glad you guys are seeing an increase in production. If anybody listening to this has any experience in podcasting or YouTubing, feel free to drop us a comment what you think we could do better. We're always looking to improve. And with that, this has been a Proof of Beauty podcast episode. We thank you guys for listening. Please share this. Make sure to subscribe, like this video. And yeah, guys, thank you guys both for your time today. It was a great conversation.
Definitely.